Thank you very much, Stephen. Well, we start here tonight. Bidvest Groups has seen its trading profit jumping by just 23% to over 9 billion rand. Levels actually last seen in 2016 before it unbundled its food service business. The group's revenue is up 13% in the period under review, and the firm also says it also saw a rebound in travel and tourism related revenue and the full year contributions from the acquisitions concluded in the UK and Ireland. Bidvest CEO Mpumi Madisa joins us now to talk more about these numbers. Mpumi, thank you very much for your time and joining us this evening.
Thank you very much, Tolani, and good evening to your viewers.
Mpumi, I wanted to start here because we haven't had the chance to speak to you yet. You came in at Bidvest in 2021, if I'm not mistaken, at such a difficult time during the heart of COVID-19 to take these reins, to take this role. How has the past two years been for you at the helm and the group?
Yeah, so I actually came in 2020. In October 2020 is when I officially took over the role. And I mean, it was a time of massive challenges, right? And complexity, when I kind of think back around at what was happening in the country and globally, during that time. Fulani, I mean, I'm very fortunate in that I've been in Bidvest for a long time. I mean, I've been in the group now for 17 years. So the point of taking over, I'd already been here for 15 years, very au fait with the organization. I had already been on the board for about 6 years. So I had been operating at an executive director level already within the group for a number of years. So as complex as it was, we stuck to the basics of Bidvest, The basics of this group is we keep it simple. We understand where the challenges are. We restructure our businesses for demand and volume at a particular point in time. We control our OPEX line and we make sure that we look after our people. And that's really what we did. And clearly when you look at the results today, we've come up out of that and it's almost as if you don't see the impact of 2020 on our numbers. So we've really done exceptionally well over the last, I would say, 3 years.
It's really impossible to have a conversation with someone without actually mentioning COVID-19 and that particular impact. When you look at the numbers this year for 2022, there was no COVID-19 expense. But when you look at 2021, you are seeing, if I'm not mistaken, over 182 million rand that you had to spend. How was it like and what was this for that particular difficult year?
Yeah, so I mean, the amount that we spent in that year was really in support of our people. So we still had a number of industries in the 2021 financial year that hadn't materially recovered and were still lagging behind. So a significant amount of that number went to topping up salaries for our staff so that they could get as close to 100% of their earnings as possible. And then the second part of what we spend those funds on is communities, We take our social responsibility role very seriously. We employ in South Africa 100,000 people. It's a big number. And so making sure that the communities that our people come from and communities who are in trouble in general are taken care of is very important for us. So we did a number of initiatives from food parcels. I think we spent money on food parcels for about 30,000 households in the 2021 financial year. We supported Woza Matric. We did bursaries for the 2020 matric students. So we did Woza Matric and we did a whole lot of other initiatives. So those funds were really in support of our people and our communities.
Let's talk about this year's financial results. You have actually said there's exceptional results that were delivered despite several domestic and global crises and rapid changes in demand.
Yes. I mean, if I had to go through some of those challenges, there's a lot, right? I mean, if we start locally, supply chain, and I suppose the supply chain one sits both locally and globally. but the supply chain remains disrupted. It really hasn't reverted back to pre-COVID levels as yet. And in response to that, we're front-loading orders. You'll see when you look at the balance sheet, our inventory levels are higher. They're about R1 billion higher, but we have to do that so that we make sure that we've got stock. And lead times are getting pushed out. So where we used to get stock between 2 to 3 months, it's now pushed out to about 4 to 6 months. So the supply chain has been an issue. More locally, we started the financial year in July with riots in KZN. And those riots took out more than a week from operations in KZN, but also they created anxiety across the entire country, and we could feel it in some of our operations. In April, we had floods in KZN, so our businesses that are predominantly KZN-based really had to deal with quite a lot. And also there was a cyber attack on Transnet, which also impacted operations at the Durban port. And our freight division has its biggest operations at that port. The global issues are known. You know, the supply chain globally is known. Globally, we know that whilst the pandemic the impact of it is not as big as it was in 2020, there's still this lagging uncertainty, you know, in terms of what needs to happen. And in the last quarter, I would probably say we saw that increase in inflation, significant increases in petrol prices, significant increases in raw materials, including finished products. And so we did in the second half of the year have to deal with this global inflation phenomenon, and lived it really across all our 3 main operating territories, South Africa, UK, and Ireland.
Let's talk about 2 units that did not perform so well, particularly Bidvest Life and the financial services. When it comes to their profit, it was sitting at 85 million rand compared to 300 million rand this time last year. What happened there, particularly with Bidvest Life? The sales there were particularly under pressure.
Yeah, you're right. So we've got 7 divisions. We had 6 of our divisions that really were shooting. They shot the lights out. And those 6 divisions produced trading profit double digits, and they also produced returns in excess of 30%, using ROFI as a metric for returns, which is our own internal kind of return KPI. So we had 6 divisions that really outperformed. You're absolutely correct. Financial services did not perform in line as expected. And the reason for that really sits in specific areas, Golani. So firstly, in the bank, from an expense perspective, we took a significant amount of impairments. So the bank's results today, you really need to think about in relation to where the banking industry was sitting in 2020. So you would have seen in 2020 the banking industry across the board taking a huge amount of impairments through their book. We didn't have that coming through at that time. We've had a lag effect, and that's come through the books now. So there's a significant number from an impairment charge perspective that's sitting in the bank. The second aspect of it is our investment portfolio. We've got an investment portfolio in our insurance business. And unfortunately, with the volatility in the markets, that investment portfolio was down 100 million. You've already spoken to the fact that the financial services division last year posted a trading profit just over 300 million, 334 million about. And so you can imagine that 100 million knock is significant. It's a third. And so when that investment portfolio didn't perform and was down, that quantum, that was material to their numbers. And then, yes, you've spoken about Bidvest Life. Unfortunately, the expenses and acquisition costs in that life business increased at a faster rate than revenue. And so the profit contribution that we were expecting from that life business didn't come through. And those really were the big issues. From a top line perspective, we could have also done better. I think we could have deployed more capital. So there is a lot of work that is going from a focus perspective in terms of sales and revenue. But also the other delay that we experienced because of the supply chain, we did have some deals that had been credit approved that we couldn't deploy because we just couldn't secure the vehicles. So some of those transactions have then moved into the 2023 financial year.
Mpumi, briefly, I want us to look ahead now. Tomorrow is the release of the second quarter GDP numbers, and we're expecting a contraction there. You sit with business leadership, South Africa as a member as well. What are your views on what to expect tomorrow and where South Africa can actually improve when it comes to economic performance?
Yeah, you're right. I mean, so this contraction is a global phenomenon, right? So if you not even if you just look at South Africa, but if you look at other economies, you'll see GDP numbers being revised. I mean, we have a big operation in the UK, and in fact, the Bank of England put out their projections, and they're projecting the UK to go into a recession in the last quarter of this calendar year. So this is a global phenomenon. I think the revision in South African GDP numbers hasn't been significant. So last year, 2022, we were looking at a growth of around 2.1%. It's been revised down slightly to 1.9%. We'll see what the numbers say when they come through tomorrow. The only thing that I can say is that, from a South African perspective, there are green shoots. I mean, Bidvest is seen as a proxy of how well the economy is doing or not. And I think when you look at the results, and we touch so many parts of this economy, I think we must believe in some of those green shoots. We've got a travel and tourism sector that is recovering. We've seen that recovery. We're expecting more recovery because our businesses that are facing that industry haven't as yet returned to pre-COVID levels. So I'm very bullish about what's going to come through that travel and tourism industry. The president lifted the cap on self-generation from that 100 megawatt cap that was there, and then now there is absolutely no cap. So from a South Africa perspective, renewables and alternative energy is massive for us. And I'm sure that decision that has been made by the president should stimulate more activity from a renewables perspective. We've got parts and industries that continue to do well. The mining industry and the agriculture industry in this country remain buoyant. And we must stay positive where that is concerned. So I think that, there's a global number from a GDP perspective, and it will be what it will be. Our view in Bidvest is we find the green shoots and we go for them. And we know where they are. And Golani, when you look at our numbers from a South African perspective, all of that growth is organic. We've made no acquisition in South Africa in this year that's under review. All of that is organic. So we must believe that the opportunities are there. And really it's around the businesses, big and small, to really focus and be able to leverage the opportunities that are available in this economy.
Mpumi, Madisa is the CEO at the Bidvest Group. Thank you very much, Mpumi, for your time.